Hello everyone, welcome back on learning candlestick chart pattern. Today we are going to discuss on Doji candlestick. If you are new in this channel, please I would suggest you to go and check all the past 4 videos to be with us on the same journey. So let's first start with what is Doji. A Doji candlestick forms when a security, stock, Forex or any instrument open and close are virtually equal for the given time period. It can be 5 minutes, 10 minutes or 15 minutes and any time period. And generally it signs a reversal or it's a pattern of continuation. In Japanese, doji means a blunder or a mistake. This is the how looks like a normal doji candle, where you can see high, close, open and low. There are many times we have seen that we don't see any color also, and it can be open as the close price, which is we consider as a cross also. So there are the sometime it looks like a cross, inverted cross or a plus sign. But there are variants also in this doji candle also, such as first is neutral doji, which I say it's open and close in the same price. Dragonfly doji, which is a bullish sign also we can consider. Gravestone doji, long leg doji. So if we talk about the dragonfly doji, in this the price open, then suddenly there is a seller who take control and bring the price down at the low. Again the buyer active and the price close at the same price of the open, then it's create this dragonfly doji. The second one is gravestone doji. In this is opposite of in this is opposite of dragonfly doji, where you can see the price is open, then suddenly there's a buyer take control, bring all the way high, and then the seller active at the end of the day or the time period, the close price is the same as open, then it creates the gravestone doji, which we refer as a bearish sign. And the last is long leg doji. The doji can be a short leg or long leg. Long leg is showing that the both sides the people are trying to pull the price in their favor, but at the end it close at the open equal to low. And there is another variance also, like people who are asking that it looks like same as a spinning top. So this is how it looks like doji, spinning top and high wave candle. So what is the difference in this doji and spinning top? The difference is the body size. Doji is totally, it's showing that equal, there is no bias on long side or the short. But the spinning top, sometimes you can see there is a bearish or the bullish side. So if you can see on the second candle, there is the body is bigger than the doji, and there the selling pressure is higher than the doji. So this is the only the difference between this the doji, spinning top and the high wave candle. So for the further we understand that how it is looks like on chart, how we can get, let's move on to the chart and see how we can get this. So this is the trading view I'm using, and it helps us to look for all the doji candle. What you can do, just go over here and type doji. Here there are other indicators also, like gravestone, dragonfly. The particular what you are looking for also you can get. I'm just putting over here to simplify only doji. So it will highlight for you that all the doji candles. So here not all the doji candle are tradable. Here we need to know that which doji we need to avoid and what is the sign of that, like earlier which I said. So in this doji candle it can be a reversal, but for that we need to wait for the price here confirmation, like the price is continue moving from the lower at 1541 till it's make the high of 2200. So almost 700 points is already rallied. Now here we are seeing on the top doji candle. It can be a continuation also, which I will show you on the later that, but for that also we need to get a confirmation. So if I'm trading on this stock, I will wait for this confirmation. So till the price is, if it's between this range, I will not take any trade. But if it's sustained above this level, I will be enter for the continuation price going higher. If in any chance, if price is closing lower of the doji, which is 2158, if it is sustained over here, I will go for the short for the short time period, and the price will go down from here. That's the sign of reversal. Now look at the other candles. Why we don't need to trade on these two trading candle? Because it's not at the top, not at the bottom, it's between that. If you see over here, the recent swing low, which is here, low and the high here, so this is at the center. We should avoid this trading candlestick pattern. Then again we'll go down and see, this is here. Here you can see it is not the gravestone doji, but it's a long late doji. On the next candle we get a confirmation the price closed above the previous candle doji high, so that here you can enter for the long trade, and you will be exit over here somewhere, because the price here consolidation and at this at the near resistance. Now look at the continuation here. When the price is rising from here, at the next here we can see a doji candle, so we need to wait here for this the high get a confirmation. Only this candle we got a confirmation with the volume. This is the showing as the price is continuation. So doji always suggests us either reversal or continuation. There also you can see here it's a continuation. So here trading view, you can go and just put the doji, and then you can highlight this color according to your preference, and then you can easily, I would suggest you to go and backtest all these candlestick pattern before you enter in your trade. Thank you for watching. See you on the next video. Bye bye.